Our guest host this morning, Andrew Ross Sorkin of the New York Times, his new book, Too Big to Fail, How Wall Street and Washington Fought to Save the Financial System and Themselves.
You should hear our conversations in the commercials.
During the commercials, exactly.
The book is out.
Today is the day. Today is D-Day, finally.
And its rankings on Amazon it will be one of the best-selling business books in the nation by far.
We can only hope. You say this from your lips to...
You've been working on it for...
It took me the past year. This was a project that literally started it actually started with a conversation with my wife the 15th, September 15th, that night at 2:30 in the morning. Right. So, it's been a year, and today's the day.
It's exciting. We're going to talk about some of the color that you got. The words fly on the wall, get tossed around a lot, but you really are in the room.
That was the goal. Yeah. It was get the reader in the room so we could actually try to understand for the first time what really happened and make our own judgment. This isn't an analytical book. This is a book to say, this is what happened, this is what Hank Paulson said to Dick Fuld, this is what Tim Geithner said to Jamie Dimon. And when you really get to see that and see the interlocking relationships between everybody and recognize that 10, 20, 30 people were running the world at that point, and how they all interacted, it may change your view of what happened.
And as we were saying during the break, I know Becky's got some earnings in a second here, but on the one hand, these mostly men are dealing with intractable problems that need to be solved in a matter of hours.
Right.
And that in itself is kind of heroic, I think, because so much was at stake. On the other hand, you see it flip in the matter of minutes to where they're worried about very marginal things.
Absolutely.
Titles.
People are talking about titles. People are talking about money. And you can see the relationships. There are petty issues that come into play. And there are heroes in this book, and there are villains. I hope that the reader comes away with a better sense of what really happened and what was going on behind the scenes, because even as a reporter who felt like we were covering this day to day, I didn't know half this stuff. So even for me, it was pretty cool.
Right. We'll talk a lot more about it. Beck, you got Bank of New York Mellon, right?
Yeah, I've got Bank of New York Mellon, and good luck trying to figure this one out. We knew some of the banks were going to be a little bit of a mess. It looks like Bank of New York Mellon's is talking about a continuing earnings per share of 54 cents when you exclude investment securities portfolio restructuring and M&I expense. If that's the case, that 54 would go up against the 48 cents the street was expecting, which would be a better than expected number. But they are talking about a continuing earnings per share loss of 204 because of investment securities portfolio restructuring charge of about $2.54. The Bank of New York Mellon talking about this, Robert Kelly, who's the chairman and CEO, talking about how they have this strategy, this ongoing strategy to try and reduce balance sheet risks. So they took advantage of recent strength in the fixed income market by selling or recognizing losses on a significant portion of our investment securities portfolio. They say that the restructuring does not materially impact capital. It is expected to benefit net interest revenue by $125 to $175 million in 2010 and it significantly reduces the risk of future securities losses. So it looks like they're taking advantage of some strength at this point to go ahead and write down a bunch of the outstanding issues on their balance sheet.
And are they writing stuff up?
I don't know. That's what I'm still trying to dig through.
One of the big issues is whether someone
writing up some of the gains that they've seen.
Exactly.
It kind of seems, if you talk about that, the recent strength in the fixed income markets, maybe they are selling some stuff and writing up. They're recognizing some losses in some places, potentially in others, but this is a pretty long release, and they're not telling you in the first couple of paragraphs, so shall we say.
Fair enough.
All right.
We'll have more on this. I'll keep reading through some of the numbers on this. But again, Bank of New York Mellon is out, and the bid-ask is slightly above the 4 p.m. closing price. Bid's at $27.30. Ask is at $28.70. The closing price was $27.23.
Meantime, we got 5 Dow components topping the earnings list today. We've already got DuPont out about a half hour ago. They did beat the street, sharply ahead of estimates, in fact. Full-year guidance also topping their current consensus, and guidance for the year gelling at the high end, at least of their range, and they are still above the street. Still to come later today, Pfizer, UTX, Coke, and Caterpillar.
Can't believe 5 today. Yeah, that's just the beginning. You want to see my sheet? This is the sheet of expected earnings that we've got going.
And at the moment, it looks like every one of them may actually beat
Potentially at this point, you're talking about some better numbers. Yeah. And that's certainly been the story that we heard last night as well. We were following Apple, as Carl was just talking about, with all those numbers. In other headlines this morning, we're also following that case of insider trading suspect Raj Rajaratnam's firm. It is rapidly losing investors. This is Galleon. The Wall Street Journal says investors are seeking to try and withdraw $1.3 billion of Galleon Group's $3.7 billion that it has in assets. Now, the firm is not required to provide any redemptions until January 1st. Many of the group's holdings are said to be in large stocks that can be exited easily and quickly without a big effect on prices. In fact, expectation is that they were selling a lot of technology shares yesterday to try and get some cash. But names reportedly include Apple and eBay.
Does any part of that story surprise you? Does it change the way we think of insiders?
It does, and I think there's going to become a real question as to what an insider is, because I think, frankly, so many hedge funds and investors, this is in part what they do. It doesn't look like there were kickbacks necessarily. It looks like they were trying to get this information, collect them up, kind of like what a reporter does. And I always say...
Although it sounded like maybe, and this is all alleged at this point, that there was some tit for tat in terms of, you give me a stock tip and I'll give you one.
I think there was some, it looks like untoward behavior perhaps. But, one of the things as someone who sort of traffics in this business is all too often, and sometimes I get nervous about it, you end up talking to people who have information that they should not have.
Right.
And I would say over the past couple of years, by the way, that's become more rampant. And so this, I think, is sending some shivers through that industry as they're trying to understand how far can they go in terms of this research that they're doing.
And this has been just trying to define. I mean, if you're not an insider, how can you get inside information? But if you know you shouldn't have that information and you still trade on it, then it is a question. I mean, it's going to redefine things for all the hedge funds out there. But, it's a time that probably needs to be redefined when you're talking about the rise of hedge funds.
This is the moment.
Yeah.
So.
Yeah. Meantime, we got a couple headlines this morning. Morgan Stanley selling its retail asset management business to Invesco for about $1.5 billion in cash and stock. The deal includes Van Kampen Investments. Morgan Stanley will receive a 9.4% minority interest in Invesco, and that transaction expected to close in mid-2010. Barnes & Noble expected to introduce its Nook e-reader today, the latest competitor to the Amazon Kindle. The device expected to cost about $259. Readers will be able to lend their digital books to friends and download books wirelessly. That business is taking off. Is this going to be Kindle ready?
We are Kindle ready. We are Kindle ready, and I hope Barnes & Noble Nook ready. I didn't realize today we were debuting together, so hopefully that happens.
Any distribution pipe, you will take advantage of.
I'm all for it.